Welcome to the stock workout where we flex on the market to make gains. In this video, I'm going to be talking about Senseonics Holdings, ticker symbol SENS. Now, this stock had a huge run up. It almost doubled, I believe, and then it has seen a sell off. So we're going to go through it. We're going to take a look at the charts to do a bit of technical analysis, see where this stock is up to and what it's doing. Can it recover from where it's at? Is it in a downtrend? We're going to cover all those things. We're going to have to take a look at two different charts, the hourly chart and the daily chart, just to understand it from a bigger perspective. But if you haven't already, hit that subscribe button so you can stay up to date on these stocks. So basically in my previous video I pointed out a resistance level at $3.91 and $4.50. We did break through both of these resistance levels, however we were not able to sustain the stock price above them. So once we broke through both resistance levels, as you can see that at the $3.91 resistance level there was a bit of volatility. We broke through it, broke under it until we had a solid breakout, went all the way up to $4.50, and that was one that we were not able to sustain. And since then we have been in quite the downtrend. Now this is the hourly chart I've got up here, and this is just representing 1 week, so this could be a retracement, and we're going to take a look into that right now. So I have got the 21-day EMA on the screen alongside the 50, 100 and 200-day moving averages. I have the volume and RSI. Now, first thing to point out is that volume has been decreasing this whole past week. As you can see in the run-up, the volume was quite high. Since this last week, since we've had this sell-off, you can see that the volume down here has been decreasing, and volume on Friday was 23 million with the average 10-day volume at 74 million. We closed on Friday at $3.46, down 4.42%, and the RSI is at 40. So anything above 70 is overbought, anything under 30 is oversold. So we are quite close to that oversold territory. There has been quite a bit of selling pressure. If you see down here in this last week, we have been quite close to that oversold territory the whole time. So there has been a lot of selling pressure. As you can see, the stock price has been coming down. Now that 21-day EMA has crossed below that 50-day moving average, and it is crossed just below that 100-day moving average as well. So if I just zoom in here, you can see that it's just crossed below that blue line, and it had crossed over the green line earlier on in the week. Now that is not something that we want to see. That is slightly bearish. There's been a lot of selling pressure. The stock price came down from highs of $4.77 roughly all the way down to $3.47, and that has made that 21-day EMA cross below the 50 and 100-day moving average. Now that's bearish on this hourly chart. That's bearish. But if I was to flip over to the daily chart, on the daily chart, that 21-day EMA is still above that 50-day and 100-day moving average, so it's trading above. So on the daily, it's still looking bullish, and that's why you need to look at two different types of charts to get a microscopic and macroscopic perspective of this stock. Because the microscopic will give you, well, sort of day traders an impression of where the stock price is heading and what's going on, and for those who hold it for multiple days, you need to be looking at a macroscopic perspective of this chart. But if for information purposes, let's take a look at where this stock price has run up from. So it ran up from $2.09 all the way to around $4.78, 129% increase it had. So it more than doubled in his share price to up to his highs, and now where it's at the moment at around $3.47, it is still up 66.54%. So that is brilliant. That is brilliant, and this may just be a retracement. And if I zoom out, you can see here on the way up it made a series of flag formations and just kept breaking up higher and higher, and it may have run up really fast, maybe too fast, and now we're seeing profit takers, and the stock price has come and settled down here at that 100-day moving average. Now the 100-day moving average should provide some support from from this 1 hour chart, it's sat just at that 100-day moving average, but we had a bounce off here at around $3.35. We had a bounce. So if I just mark that on the chart, $3.35, I'll get rid of these resistance levels and I'll get rid of that one. $3.35 should act like a level of support because we had a bounce off there a couple of days ago. And yes, it is looking like we are heading back towards that support level. It's a light level of support, $3.35. A more stronger level of support lies down at $2.80. $2.80 is just below where that 100-day moving average is. I don't want to go down towards there, but it may happen if there is a lot of selling pressure. However, the 100-day moving average should provide some level of support, but do bear in mind this is the hourly chart. Now, a better representation, I believe, will come from this daily chart because, as you can see, the RSI looks quite low on this. It's 40.99. You think it's quite oversold, but it's oversold on an hourly perspective. Now, if I switch over to the daily chart, you're going to see that the RSI is quite different. So on this daily chart, if I zoom in, get the last few days, you can see that the RSI is at 62. So from a daily perspective, the RSI is at 62, and that is still quite close to overbought. As you can see here, we were in the overbought territory twice, and this may just be the RSI correcting itself, coming back down into the normal zone, which is between 30 and 70. So from this perspective, it doesn't look oversold on the daily chart, which implies that if this RSI does come back down slightly more towards neutral, neutral being 50, we may see that stock price come down further. That's if that RSI comes down further, we may see that price come down further as well. As you can see here, the RSI came down here, and this was on the 9th of June, and this was this red candle here, and then we had a huge pop after that, and the next day we ran up to $3.75, which is this green candle here. So if this RSI does turn back up, we may see the price shoot up again. However, if this comes towards that 50 sort of neutral level, if it retraces further, you are going to see that stock price get dragged down further too. So RSI is definitely something to keep an eye on. And from this daily chart, you can see that that 21-day EMA is above that 50, 100 and 200-day moving average, which is still bullish. That is very bullish, and that is something good. That is something we do want to see. Obviously, on the hourly chart in the last week, with quite the selling pressure, the hourly chart showing the 21-day EMA below that 50 and 100-day moving average, but the daily chart is still above it. So from a macroscopic perspective, this is still bullish. Senseonics is still bullish. And there is another thing that I wanted to mention as well with Senseonics stock. There was the whole thing with the short squeeze. Obviously, I believe that their CGM is amazing and is a proper solid company to invest in for the future, but there was the whole thing about the short squeeze and short float and all of that. And according to Finviz, if this loads up, according to Finviz, if we take a look at Sense Stock still has a short float of 27.37%. So short volume is still quite high, the short float. We could still be primed for a short squeeze, who knows? But from taking a look at the charts, we can see that the RSI has come down slightly, which is probably and is the reason for that sell-off. It might just be a healthy retracement. So I would say keep an eye out on the RSI. If you do see the RSI come down further and carry on going down, and you don't see it sort of uptick, then expect that share price to come down further. So the first line of support is at $2.35, and the next line of support is at $2.80, and both of them supports I pulled out of the 1 hour chart. On the daily chart, it will obviously look different. But another thing is also that the volume has been slightly low, so we do need the volume to pick up. So we need the volume to pick up as well as keeping an eye out on that RSI. So obviously on the hourly chart, the RSI is at 40. If you see that RSI pick up on the hourly chart, it is going to pick up on the daily chart too. But the daily chart, the RSI is at 63. So if it goes back towards 70, we may see another sell-off and it come back down again. So two things to keep an eye out on: volume and RSI. RSI is going through a retracement on the daily chart, and it is quite heavily sold off on the hourly chart. So they are conflicting reports from the daily and hourly chart, but the daily is the bigger picture. So if you do see that RSI come down further, we may be testing new supports. It would be good to have a double bottom here at $3.35. So we had a bounce here, an increase here. If we see another bounce here, that would be really good to see, and from then on out we should break out on the upwards. So there are the price points. I've given you support levels, the resistance level, main resistance level we were unable to break out of and sustain, I should say, is that $4.50. We did just pip above that. Profit takers stepped in. We were up over 100% from a number of days, so a lot of profit taking would have happened at that point. $4.50. And now we have retraced. Support level lies at $3.35. The next one, deeper support level, rise at $2.80. They're price points to keep an eye out on. Remember, volume and RSI both on the daily and hourly chart. Keep an eye on both of them. We want to see that RSI on the hourly chart increase, but we want to see the RSI on the daily chart come back into a more neutral zone. Sitting at 62, it may come back down towards the 50s, but obviously if that happens on the daily chart, you are going to see this price come down further on the hourly chart, and it's going to look pretty oversold here on this hourly chart. So do switch between both charts. Keep an eye out on both volume and RSI, two very important things to keep an eye out on. You've got your levels of support here. Set your stop losses. You may be able to enter in at a cheaper price. Short float is still high, so this may be primed for a squeeze. We will have to see what happens. And with the squeeze, volume is something to keep an eye out on. If you see that volume explode, most likely you're going to see that price explode too. That's it for this video. If you appreciate that, hit that like button, subscribe to the channel so I can keep bringing you more content, and I'll see you on the next one.